property, ETFs, crypto, the holy trinity of modern investing and the unholy war inside every traveler's brain. You're sitting on a beach in Bali thinking, should I buy a condo, an index fund, or more Bitcoin? I've crunched the numbers, lived the nomad life, and today we're answering the question, which investment actually survives a nomad lifestyle? Property, ETFs, or crypto? Let's start with the property. Everyone's told you buy land, they're not making more of it. True, but they're definitely taxing and maintaining more of it. Let's look at some facts you can drop. Global property averages about 6 to 8% long-term annual growth. Here in Australia, house prices rose a staggering 396% from 1993 to 2023, outpacing wage growth by 3 times. But here's the catch for investors. Rental yields in major capital cities often sit around just 3 to 4% gross. And that's before you even think about maintenance costs, strata fees, and land tax. And that brings us to the real problem for nomads. Property ties you down, literally. You can't just pack up your house and carry it with you to D9. For us, it's an anchor, not a sail. On the plus side, it's a tangible asset. You can leverage it with a mortgage, and it's been historically stable. But the downsides are huge for a traveler. It's a liquid, meaning you can't sell it quickly. The entry cost is massive, and the management headaches from a different time zone. Forget about it. Property is great until your tenant calls you from 6,000 kilometers away about a leaking tap. Now let's talk ETF as the accountant's version of meditation. You invest, you diversify, and then you do absolutely nothing. ETFs are like the rice of the investing world. They're simple, they're filling, and they go with absolutely everything. The facts really hit home here. The global ETF market soared past $10 trillion US in 2024. And if you look at the S&P 500, its average annual return from 1970 to 2023 was 10.3%. Here's a killer stat. 92% of active fund managers, the people you pay big fees to, actually underperform simple ETFs over the long term. And why? Their expense ratios are tiny, often as low as 0.03%, compared to over 1% for many managed funds. So why is this so nomad friendly? ETFs don't care where you live. You could be trading from a cafe in Thailand or a cabin in Tasmania. All you need is a reliable Wi-Fi connection and a bit of emotional control to not panic sell. The pros are clear. They're diversified, highly liquid, low cost, and generally tax efficient. The cons? Well, they can be a bit boring. It's slow, steady compounding, not a get-rich-quick scheme. And you still have to deal with taxes in your home country. So make sure you watch those TO rules if you're an Aussie. ETFs are like compounding friendships, slow to build, but incredibly powerful over time. Ah yes, now for the digital jungle of crypto. The only market where people celebrate a 30% crash by putting laser eyes on their profile pictures. Let's drop some hard facts. Bitcoin's average annualized return from 2011 to 2024 was an insane 120%. But that came with terrifying drawdowns of over 80% at times. Just in 2022, the crypto markets lost $2 trillion in value. Yet, adoption is growing fast. By 2025, there will be an estimated 560 million users worldwide, mostly aged between 25 and 40. And right here in Australia, a 2024 ASIC survey found that 16% of us now hold some form of crypto. So why do nomads love it so much? Simple. No borders, no banks, no opening hours. It's perfect for someone living out of a backpack right up until you lose your seed phrase along with your passport. The pros are that it's incredibly portable, has huge potential upside, and can act as a hedge against inflation. But the cons are just as massive. It's wildly volatile, largely unregulated. It's frighteningly easy to lose access to your funds forever, and the emotional cost of riding those waves is high. Crypto feels a lot like dating. It's exciting, it's unpredictable, and it might just delete all of your savings overnight. So, what actually survives a nomad lifestyle? For digital nomads, flexibility is always more valuable than ownership. Property roots you to one spot. ETFs grow quietly in the background, wherever you happen to be. And crypto moves incredibly fast, but so does your blood pressure. So, what's the ideal portfolio for a global citizen? In my experience, a balanced approach works best. Think about 60% in ETFs for that steady, reliable compounding. Maybe 30% in property, but smartly through real estate investment trusts or REITs. Or maybe one solid home base back in Australia. And then a little 10% for crypto, enough for fun and to cure your FOMO. That mix gives you growth, it gives you stability, and just enough excitement to feel alive without the risk of ending up broke in Bangkok. At the end of the day, freedom is the real investment we're all chasing. ETFs buy you peace of mind. Property can buy you roots if and when you want them. And crypto buys you adrenaline. You need to balance them just like you deep balance a good travel itinerary. A little bit of safety, a little bit of adventure, and a whole lot of coffee. Thanks for watching. Like, subscribe, and be sure to check the links below for the tools I personally use to invest in travel smarter, aware, global style.